Hey, it's Rich Reynolds with Highland Mortgage. Today's July 1st, 2024. What that means is the state of Florida released $100 million in funds to be reserved for first-time homebuyers on the Hometown Hero program. I'm going to do a presentation on the program. It's going to be under 20 minutes. Let's go. So you can see that the program is the Hometown Hero version 3. Funding is available as of today, July 1st, 2024. Additional $100 million in funds were deposited into the Hometown Hero account. They think that those funds are going to last anywhere from 3 to 4 months. What is the Hometown Hero program? What does it do for the customer? So, as you can see, it's going to give the customer at a max $35,000 and at a minimum $10,000 to be used for closing costs, down payment, and prepaids. This money is based off 5% of the first mortgage total loan amount. Once again, minimum $10,000, not to exceed $35,000. Buyers must work full-time in Florida for a company that has brick and mortar in Florida. They don't have to be headquartered in Florida, but they must have brick and mortar locations in Florida. The old rule where they had to work up to 35 hours a week no longer applies. Hello, it's Rich. It's July 1st, 2024. That means that Florida Housing is releasing $100 million today to fund their Hometown Hero program. Give me a second and I'm going to go over all that. So what this means, Florida Housing as of today, Hometown Heroes version 3, funding is available. You can do reservations starting today. $100 million is going to be appropriated to the Hometown Hero program. What does this mean as far as funds to the borrowers? They're going to receive a maximum of $35,000 and a minimum of $10,000. No matter what the loan amount is, they're going to get at least $10,000. No matter what the loan amount is, they're only going to get $35,000. Borrowers must be full-time employed in Florida. What that means is they have to work for a company that has brick and mortar and report to a company that has a brick and mortar location in Florida. The old rule where the borrower had to work 35 hours a week is no longer there as of today. So once again, the borrowers are going to receive 5%, maximum $35,000, minimum $10,000. Now the program is deferred up until one of these things happen. So sell, transfer, or satisfaction, or refinancing of the first mortgage. In addition, if you rent the property, you have to come clean on the mortgage amount as well. The loan is available on FHA, VA, USDA, and conforming bond and TBA type loans. So TBA is the bond alternative. It's borrower income only. So if you're married and only one of you is on the loan and you make $130,000, then you'll qualify, even if the other borrower or buyer makes $500,000. It doesn't matter. Bond is household income. What household means is the total income for the entire house. Anyone living in the house that's 18 or over earning income for the Hometown Hero program, that income is going to be considered. All of that, the spouse, whether they're working or not. Both of these programs are available on conventional FHA, VA, and USDA. Eligible borrower requirements. A hero is not what you think. A hero is a full-time employed borrower working and reporting to a Florida-based employer that has brick and mortar locations in Florida. If you are a veteran, you do not, veteran or active duty, you also qualify. If you're retired though, just a regular retired, I'm not talking veterans, I'm talking retired from anything else, you don't qualify. You have to be working or a veteran. Documentation. We can get a VOE, we can get pay stubs, a DD-214 for veterans, and a current LES statement for active duty. Once again, borrowers must work for an employer that have brick and mortar locations in Florida, and they must report to or work from that location. Documentation needed to confirm full-time employment. Well, that's real simple. So Pay stubs is the first one. If pay stubs don't work, then as far as reflecting 40 hours, then we can get a verification of employment. We can also get a letter on corporate letterhead. In addition, an email will work for that as well from the corporate address. If you are self-employed, you must have a letter from your CPA or bookkeeper or tax preparer that validates that you work full-time. A letter of explanation from the borrower does not work. You must come from a CPA, bookkeeper, or tax preparer. Documentation needed to validate a Florida-based employer. So copy of pay stubs and 1003 confirming the employer address. A 1003 is a universal residential loan application. Copy of a verification of employment, a letter, or an email with the location of the company. They're probably going to Google search to make sure it's there too. Once again, if you're self-employed, a couple things. Generally speaking, they're going to check SunBiz and they're going to check with the Department of Professional Regulation to make sure that you are licensed and that your address is what you say it is. If you are a 1099 employee, you must work for or be contracted from a Florida-based company. If you are Schedule C, we're going to need to see the tax returns to validate that the address is Floridian. First-time homebuyer requirements for TBA. Borrowers must not have taken ownership or lived in their primary residence as a property they've owned in the last 3 years. If they own an investment property or a second home, as long as they have not lived in it as far as their primary residence, they are fine. Veterans, don't have to be first-time home buyers. Also, active duty military on the TBA version don't have to be first-time home buyers. Once again, it's the same. You must have not owned a property for the last 3 years. But they do include one fun thing here. On bond, if you are married and you have a non-borrowing spouse, they must not have had ownership in the last 3 years either. If you're a veteran, the exemption applies. You will have to, unnegotiable, have to have 3 years of tax returns for all borrowers, including the non-borrowing spouse. Please note that active duty military do not qualify for removal of first-time home buyer requirement. They must be first-time home buyers. Bond income. So bond income is a little different than TBA. First of all, bond income is borrower income, or TBA is borrower income only. Bond is household income. Household means that anybody that's going to be in the house that's over the age of, or 18 or over and earning income, they're going to use that whether they're on the loan or not. So you're going to have program qualifying income and then loan qualifying income. They're going to be different, especially if you have someone living in the house that's working. If either one of those numbers is over and above, then you don't qualify. Credit qualifying income is basically the income for the person that's on the loan. Program income is going to be the person on the loan plus all the borrowers or all the buyers living at home. Exceptions, income limits cannot be exceeded, but no exceptions. Once again, all borrowers in the loan and the non-purchasing spouse must be first-time home buyers. We're going to need 3 years of tax returns for all borrowers and the non-purchasing spouse. And the program income is based on all borrowers and any income from any resident in the home. And this is for Hometown Hero Bond. TBA income. One screen, real quick. TBA income is based off 1003, but what the customer puts on the loan application, and as far as his residence history, is the same. We don't need tax returns. And the income is only based on the borrower on the loan. Doesn't matter how many other people live in the house or if you're married, what your spouse makes. Homebuyer education. For TBA and bond, it's the same. So one borrower must complete an approved online course. You can do in person or online. I would tell you to do online. It's much easier. What'll happen is once the file goes to application, my loan officer assistant, Amy Hester, will send links to online classes that they can take, and then you just send in their certificate. The certificates are good for 2 years. Credit scores. So minimum credit score is 640 for all types of loans, FHA, VA, and USDA, Fannie Mae, Freddie Mac. Blended credit scores are not permitted, and with the exception, mobile homes and manual underwrites require a 660. That's the only two that are different than the 640. One quick word on credit scores. Just because a borrower has a 640 does not mean they're going to get an approved eligible through Fannie or Freddie. Generally speaking, on conforming, you're going to need a credit score somewhere between 680 to 700 to get approved. That's just what we've seen in the past. They may have loosened it some, but just because they have a minimum credit score does not mean that they're going to be eligible or be approved for the loan itself. Debt to income ratios. Maximum is 50 with a AUS approval. AUS is Fannie Mae or Freddie Mac. They have a desktop underwriter and loan prospect advisor, and we run that on conventional FHA, VA, and then USDA has their own system that we run through. Maximum with manual underwriting is 43%. Maximum with manufactured homes is 45. Don't forget also on manufactured home, the credit score is 660. Income limits. So for TBA, they're pretty strong, as you can see. Hillsborough, Pinellas, and Pasco are all the same. Polk is a little bit less. USDA is 1 to 4, and then 5 persons or more. TBA is based on the loan limit. So FHA is 498, 257, which is the max loan amount, and conforming is 766, 550 for all the counties. If you are on Hometown Hero Bond, you can see where the loan limits, or excuse me, the income limits are significantly less. Once again, Polk is less for 1 to 2, and for 3 to 3 plus, they're a little bit higher, but not anywhere close to the TBA. What is targeted? Targeted is a based on geocode, and I would have to look it up, and if you qualify, then your income can go a little bit higher. Once again, the acquisition price is a little bit higher. A non-targeted acquisition show that the most expensive home that you can buy on bond is 510, 939. On if it's part of a targeted, you can go to 624, 841, which is these are significantly less than the TBA program. Cosigners, they are allowed on both. Neither one of the cosigners have to do a first-time homebuyer class, and they don't require tax returns. The difference is this. When you're figuring income on TBA, the cosigner's income is part of the qualifying income. On bond, it is not. That's one good advantage to bond over TBA if you're using a cosigner. One quick word on cosigners. There are cosigners and non-occupant co-borrowers. A non-occupant co-borrower is not allowed. A non-occupant co-borrower has ownership. If you're going to have a cosigner, the cosigner, all they're going to do is cosign for that loan. They have no ownership. Zero. Zilch. No right to make any money off the equity built in the property. If the customers don't pay, they're just SOL. They're going to have to pay themselves. Eligible first mortgages. So you've got FHA, VA, and USDA. Fannie Mae Fannie Mae on TBA is not participating. So on USDA, let me start over again. Eligible first mortgages for TBA, FHA, USDA, and VA. Conventional, only Freddie Mac. Fannie Mae is not participating. That also means there's no mobile homes on Hometown Hero TBA. They do have the reduced mortgage insurance for 80% income less. If it's over 80, then your mortgage insurance is higher. The other thing is your interest rate on 80% above and below is a little bit higher. I'll run rates. I'll go show you rates before we're done with this presentation. Hometown Hero Bond, FHA, VA, and USDA. Bond does have both Fannie and Freddie over and under 80% of AMI. Manual underwrites, FHA, VA, Freddie Mac, and Fannie Mae only. Maximum debt to income of 43, maximum FICO of 660, not permitted with manufactured housing. Once again, debt to income in manufactured housing is 45 and the credit score is 660. Type of properties, real simple, single family, condo, construction in loan, meaning that it's a home that's already built by the builder, no CP loans. 2 to 4 units, mobile home and land, modular and land, and townhomes. Quick notes on mobile homes and modular. Once again, don't forget, 660 is the credit score, max income of debt to income of 45, must be existing and no older than 1994. Must be at least a double wide, and for FHA, USDA, VA, and Fannie Mae only. Freddie Mac does not do them. And manufactured homes are not available on TBA because Fannie Mae is not participating and Freddie Mac doesn't do them. This is a pretty important page for real estate agents. Cash back to the borrower is not permitted at closing. What does that mean? So the one exception is gifts. If they get a gift, then they can get that money back because it wasn't their money to begin with. Listen to this, please. The earnest money deposit and the appraisal fees that are paid are applied to the transaction. Excuse me. The earnest money fees that are paid and the appraisal fees that are paid are applied to the transaction at closing. They are not to be refunded to the borrower. The one exception. I did have a customer years ago that wrote $25,000 earnest money deposit on a bond loan and he wanted the money back and there's no way to get it. So the only way to do that is the agents write an addendum that states that the borrower is to receive his earnest, is to be refunded. The word is refunded. The borrower to be refunded the earnest money check back at closing. That protects the seller the entire time, and he only gets the money back if the loan closes. It is not part of the final closing disclosure. It basically goes from to not be part of the transaction. That addendum is removing that from the transaction, but it's not removable until you're at closing so that you know the loan's funded. This is a squirrely thing that has been around since they redid Hometown Hero version 2. All borrowers must certify that they have not been convicted of a sex offense against a minor. That's all I'm going to say about that. This is another quick one for you. So over the last 10 years, I've done a lot of bond loans. Some of those people may have sold and not owned for 3 years. Unfortunately, Florida housing is only once in a lifetime use. You can't go back to that well for a second time. Allowable program fees. This is pretty cool. So doc stamps and Florida intangible tax are not charged on Florida housing loans. The reason is the money's coming from the state of Florida. Also, no discount points and no origination fees are charged either. The max lender fee is $17.50, and then you've got the following fees to Florida Housing and the servicer. So you've got $275 to eHousing, $400 to Lakeview. Lakeview is the folks who you end up paying your mortgage payment to. $75 to tax service, $10 for flood cert, and the second mortgage is only allowed one fee, and that's a recording fee, anywhere from $60 to $80. This is a big one, especially with what's going on today. Realtors, your commission cannot, I repeat, cannot be paid with Florida housing funds. That second mortgage, none of those funds can be used to pay for your commissions or compensation. What can be paid, though, is a realtor fee, transaction coordinator fee, up to $500. So I've gone to Florida Housing's website, which you can see up here. It's under e-housing, which is you'll go to e-housing and then search for Florida Housing under program providers. So you can see over here they've got standard bond, standard TBA, plus TBA, and then Hometown Heroes. Hometown Heroes has everything that you might ever need. Most buyers and realtors will never need to go to this website. Quick point, rates can only be locked between 10 and 8 p.m. Monday through Friday. You must have an executed contract in order to lock a loan. When we're going down here to Hometown Hero rates, they are as follows. Hometown Hero TBA, 6.75. FHA, VA, and USDA. Freddie Mac, 80% of AMI and under is at 7%. Over 80% of AMI is 7 1/8. For the bond program, 6.5 for VA, USDA, and FHA, and 7 1/4 for under 80 AMI, and 7.5 for over AMI. These rates are all great. So that's the end of my presentation. As of around 2:30, 3 o'clock on July 1st, there's already $13 million in reservations reserved. It means there's $87 million left. If you'd like to get pre-approved, or if you have any customers that need to get pre-approved, please give me a shout. Also here to answer any questions. Look forward to talking to you. Have a good one.